In the interest of time, we'll get the presentation underway. So thank you all for making the time to come to today's presentation. It's quite exciting for us to do the quarterly update at this time because we've just ticked over 3 years with a full track record over those 3 years. There's some exciting updates that we'll give you today that have really come to light over the last 12 months or so, which Ryan and Dean will go through. We will be circulating this webinar after today's presentation. There is a recording being done, and we do ask that you put questions into the chat throughout the presentation, as we'll make sure that we have some time at the end to take care of those questions. The aim of today's presentation, ultimately it's about ensuring you're better informed around the digital asset space. We'd like to be seen as leaders in the space, providing you with the newest information and ensure you're on top of all the information that we're receiving. The other thing that we'll do is provide you with an update on our performance and really the attribution. So how is it that we have managed to be the top performing fund of 2024? And just as importantly, how do we see the landscape at the moment and how do we see that unfolding over the next few months and in the medium term? We'll also talk a little bit about defraying the risks in the space and then provide you with an opportunity to ask questions at the end. General disclaimer. This is a general presentation. We don't know your personal circumstances, so we do request that you speak to an advisor or seek personal advice before investing. Today you'll hear from Dean Cerrone and also Brian McMillan. Dean's background, he'll probably be very humble about it, but Dean's probably one of the globally the best operators in the space. There's very few people on the planet that have the same experience in running a node, and he's very handy when it comes to looking at businesses which ultimately form the tokens and understanding whether they're going to be successful or not. Similarly, Ryan has a depth of background in funds management and looks after the compliance side of things and also ensuring that we defray risks at an investor's level. If you're interested in speaking to those two gentlemen, they always have an open door policy, and we'll give you the details where you can contact them should you wish to do so outside this presentation. For those that haven't invested in the fund, by way of background, it is a digital asset fund, diversified, so it's investing in Bitcoin as a cornerstone, and then we're providing alpha or outperformance by selecting other digital assets. A few key features. Unique in the industry is the Bitcoin performance hurdle. So it is a 2 and 20 fund. That means there's a 2% MER and a 20% performance fee, but that performance fee is not paid unless we outperform Bitcoin. That is unique to this fund. The other thing that's interesting is the 2% MER is covered by the dividend yield or the income that is generated through some of the staking of coins in the fund as well. We're a high conviction fund. We stick to the top 50 digital assets in the space, so it's very secure. We talk about it being safe. We also say secure. When we say secure, we're talking about institutional grade custody, just the same custody that BlackRock's use, and it means that it's backed by Lloyd's of London. And for us, we're comfortable to take risk in the space in terms of generating return. What we're not willing to do is lose investors' money. That's why we've got institutional grade custody. Finally, digital assets. As I mentioned, it's a bias towards the top 50. Is it working? Well, fortunately, it has to date, and we like to think it'll continue to perform. We were awarded the top performing fund of 23-24 by Morningstar and AFR. You'll see that performance. If you look up Morningstar, you'll see that we are the top performing fund. Over the last 3 months, we've certainly kept up with Bitcoin. More importantly, we're up about 40% for the year, and over a 12-month period, we have outperformed Bitcoin by about 16%. So we're achieving the results that we're after, and that is not only keeping up with Bitcoin, but outperforming. And we're doing so at a lower cost than you can access through an ETF. I'd now like to hand over to Dee, who will talk through performance, attribution, what we've got right, and how he's seen things over the last few months. Thanks, Dee.
Awesome. Thanks, Gabe. I think to talk about the year to date, I think the best way we can cover off is by looking at a chart as a backdrop. And so what we've done here is we've got both Bitcoin and Ethereum as you know, to demonstrate what's been happening in the ecosystem as the largest two assets by market cap, and the vertical yellow lines just depict the separation of the quarters. So if we start off by looking at Q1, Q1 was a great quarter for the Bitcoin and the broader ecosystem. It really was a case of rising tides lifts all boats, and so where we've got this little rocket emoji on the far left, this was when the Bitcoin ETF launched in the States, which was around the 10th of January, and this was a huge deal for the asset class and Bitcoin in particular. And so we had the likes of BlackRock and Fidelity and some huge household names, really pushing this through their investor base. And through that period, we saw Bitcoin really push up from around 40,000 US dollars per Bitcoin up to an all-time high in March of 73,000 US dollars. So it was quite an aggressive movement in the markets, and everything around it. All the good quality tokens were lifted at that point in time. After that, we've seen the subsequent two quarters, Q2 and Q3. The story's really been choppiness and maybe a little bit of a downtrend through that period. So it's been a period where Bitcoin sort of ranged, using Bitcoin as a proxy for the ecosystem. It's ranged from 50 to 65K through those two quarters, and it's just been really looking for some direction, so a strong signal to make a move. And Ryan will talk about that a little bit later in this presentation. Another key event that happened around July the 23rd was the Ethereum ETF launched, which was the equivalent of the Bitcoin one that launched earlier in the year. However, it really was a different story. So we saw a significant amount of selling happening here from the Grayscale Ethereum Trust, but it wasn't met with the same level of buying demand that we saw from Bitcoin. And so at that point in time, Ethereum really did start to underperform, and it has continued to underperform since then. So it's really been a different experience, than what the Bitcoin one, the strength from the Bitcoin ETF. And I think for us as a fund, we made the decision around 12 months ago to sell off our Ethereum holding, and that was really based on two key sort of factors. One was that we didn't agree with the direction Ethereum was heading from a technical point of view, moving to a layer 2 architecture with a different sort of fee model around it. And the second point was that we really didn't think the market was ready to digest a second ETF in the space, and certainly a more complex one with a more complex sort of tech sort of stack wrapped around it. And for us, that trade to date has worked very well. We've remained very high conviction Bitcoin and Solana ecosystems. So that's the native tokens and the tokens within each of those ecosystems. And that has worked well. I think the one other thing I really want to talk about on this chart is that period through Q2 and Q3 where it's been a bit choppy, and it's been relatively boring, in the markets. And what we've seen is meme coins really break out in terms of subsector outperformance. And so when you look at that, it's often a byproduct of periods where investors are just getting a little bit restless and a little bit bored, and they're looking to do interesting things. And at this point in time, we've also seen the technology come a long way. So some of these newer blockchain technologies are very fast and very cheap to operate on, which just provides a perfect breeding ground for meme coins to be spun up. And we're seeing it could be up to 10,000 a day of new meme coins being spun up. It's really sort of blowing up, and those and all that trading and speculation is happening on the more modern and the faster and cheaper blockchains. And we'll see on the next slide what that's done for Solana as an example, in terms of just generating transactional activity, user activity, developer activity, etc. So that's been interesting. We don't invest directly in the meme coin ecosystem. However, we certainly do like to think that we can pick the underlying blockchain platforms that those meme coins operate on, and we get the benefit of that that way. Okay, so one of the unique things we can do when we look at analyzing the trends and the performance of blockchain technologies is looking at on-chain activity. So this is what's happening in real time. We're not waiting for third-party data delayed in analyst reports or anything like that. We're looking at actual transactions on the blockchain, and it really tells a story. So this particular chart here, as an example, is looking at daily active addresses, and it's looking at a lot of the leading blockchains, and you can see here that green line is Solana from the start of the year through to now, and we've seen a growth curve of around 1 million daily active addresses to over 6 million most recently, and that trajectory tends to be continuing on. Some other interesting aspects of this chart has been Sui and Base, which is Coinbase's layer 2 platform, which is launched, and they're seeing a lot of growth and activity at the moment. And again, these are really those newer technologies that are cheaper and faster, and we're seeing developers gravitate to those platforms because they want to take advantage of the ability to produce interesting use cases, and that mainstream adoption can start to appreciate. So we look at all sorts of metrics, daily active addresses. We look at transactions, total value locked, where the developers are heading. We look at all these different signals to work out which liquid tokens that we think that are going to show strength in the periods ahead. All right, I'm going to hand over to Rhino now to talk about Q4 and the market outlook for 2025.
Thanks, Dean. Yes, so there's a confluence of factors that pushing the market higher at the moment, and we expect those to continue for the next definitely quarter and probably for another 12 months or so. Top of that list is without doubt the US election. First and foremost, markets love certainty. So you can see here in the chart, each election, the market gets certainty. This doesn't just happen in crypto; it happens in equities, happens in all markets. More pronounced here in crypto, and we would expect our base case is for a continuation of this, and that's not just due to the US election certainty. That there's another of these other factors backing that up, like central bank easing cycles, global liquidity, and just the normal 4-year crypto cycle, often about 6 months after a halving event in Bitcoin. Again, the same thing happens, and that aligns with the US election. So it's hard to determine which of those two factors is the most important. At the moment, the US election is the one that we're focused on the most. In terms of the US election itself, you've clearly got Trump as being pro-crypto and pro-Bitcoin. Kamala has made some comments, a couple of comments that sound pro-crypto. So I think either way, moving away from a Biden administration is going to be positive for the ecosystem. A Trump win would be more positive, given he has been a little more forthcoming in his policies towards crypto. Kamala, we do know that she is now being advised by Scaramucci and Mark Cuban, who are big crypto advocates. So there is hope that she could also be, turn the page from the Biden administration, which has been disinterested to slightly hostile at times towards the ecosystem. So either way, we think we're in for market certainty and definitely a better administration, potentially a much better administration. In addition to the presidential election, there's also a really important senatorial election going on in Ohio. So Sherrod Brown is the chair of the Senate Banking Committee, and he is quite a crypto hawk or skeptic. It's part of Elizabeth Warren's anti-crypto army. It is currently behind in the polls, so that would be a big loss for that anti-crypto movement in the Senate as well. So we're watching that closely. Hope that continues to progress the way it is. It's being funded by a crypto super PAC, which is not just throwing money at who they think the best presidential candidate is, but going in and supporting both Democrats or Republicans if they are pro crypto and going to further the interest of the industry. So that's one of those key battlegrounds that pack has chosen, and so yeah, we're watching that one closely. I'll flick on to the next one. So we also talked about global liquidity and central bank easing. I really like how Michael Howe breaks down the global liquidity cycle. There's a lot of elements to global liquidity to unpack, but he combines a lot of them in these charts, and you can see a number of different analysts pointing to the same thing, which is we really bottomed out after that COVID contraction in global liquidity. We're turning the corner and liquidity is coming back to the market. One of the ways liquidity comes back to the market is central bank easing rates. And you can see on the table on the right there, the far right column with the green and red. The green indicates easing. The last move from that central bank was to ease rates and cut rates, bringing liquidity back to the market. So we think there's a global push behind us as well on top of this, which is really helpful for risk assets, crypto, Bitcoin, chief among them. So if we flick onto the next page, you can see what does that liquidity typically do to the market. So here we're looking at an alt season. What we really want is to see alts really strongly outperform. That's what we're setting up to take advantage of at the moment. And we think we're just on the cusp of a real alt season at the moment. Alts being all coins that are not Bitcoin. All of them have smaller market caps, and therefore a small amount of inflows into those can have a bigger impact on their performance. So this chart here shows where we think where alt season has happened as expressed by Bitcoin dominance. So Bitcoin dominance is a percentage, the percentage market cap of Bitcoin as it represents to the whole crypto ecosystem. So when it is falling, like in that first far left red box, it is alts are outperforming significantly. And again, we've seen this happen after the election, which is no surprise to see that crypto rally after the election that has kicked off historically an alt season. Again, we think we are on the cusp of another one of those. So that is, crypto has given us these every 4 years, these really strong bull markets. And our base case is that we are getting really close to another one of those.
Thanks very much, Ryan. By way of summary, Dan explained where we've come from, and that is we took a position on Solana and we de-risked from Ethereum, contrary to a number of other players in the market, and that has served us very well today. Ryan explained where we're at the moment, and certainly there's a confluence of factors that we believe will be underpinning performance in the coming 12 months. We think now is really a good time to be getting in, particularly with the elections coming up. Best way to demonstrate our ability to manage markets and manage performance is the fact that we work with the top performing fund of 2024. We really do have a pinpoint focus on what assets to put into the portfolio. We have a mandate that allows us to have high conviction. That's what we do. And that's why we hope to continue to be leaders in the space. I'll now open it up for questions. So feel free to put them into the chat. And we definitely have an open door policy outside of this. But if you've got any burning questions on the digital asset space, on the fund, on anything at all associated with digital, please put those into the chat. First question I have is for you, Ryan. I think a question around gold. We've seen gold rally heavily over the last 9 months. Why hasn't Bitcoin rallied as hard as gold?
Yeah, it's really interesting to see gold at all-time highs. This has happened a couple of times in the past where Bitcoin has led, where gold, has led Bitcoin. That happened in 2020 and 2018 as well. So it could be a case of that, and it can just be different. To see gold rallying at the moment is a bit unusual. Typically, gold rallies when you have negative real interest rates, which we don't have at the moment. So I think the market is sniffing something else out, and my take is that the market is sniffing out monetary debasement in the US. You can see the major buyers of that gold are China and central banks like China who would otherwise be buying US treasuries. So instead of putting more money into US treasuries, they're putting that into gold. Their thinking is either inflation is going to be running higher in the future or that the US is going to be printing a lot of money. So they're looking to store their wealth elsewhere. We think gold is historically the good place to do that. Increasingly, Bitcoin through the future, we think is a better place to do that.
And Ryan, there's comment around central banks and in fact holding Bitcoin as a reserve asset. Can you talk a bit more about that?
Yeah, I think if we do see Trump get in in the coming weeks, 2 weeks out now, one of the policies that he has talked about, which is really interesting, is instituting a global reserve of Bitcoin for the US. That they already hold about 200,000 Bitcoin. Interestingly, China holds about 190,000 Bitcoin. So they're already holding these reserves, but to actually institute it as a formal reserve, you can think of it then something like the strategic oil reserve or strategic gold reserve. This would be a digital asset strategic reserve for the nation. You could think about that as central bank holding it. It's on the government's balance sheet, so they're not too far apart. What would that mean? I think you would see other central banks and or sovereigns around the world also having to take a position to hedge and to put Bitcoin somewhere on their balance sheet, whether that's on a central bank or in a sovereign account, one of the two.
We've just had a question regarding the alternatives to Bitcoin. I think there's a twofold question. Why wouldn't I invest in a Bitcoin ETF? It's cheaper. And then number two is, what are the other assets you're holding besides Bitcoin?
So,
Okay.
Do you want me to take that one? Sure.
Okay,
Yeah, okay, no worries. So we come up against this one a lot. And the question, I think, is, I could just go out and get an ETF, a Bitcoin ETF, and that's a pretty straightforward process. And we think Bitcoin's a great asset. We really do, and it's been a leader for a long time. Our job is to diversify, so to provide access to a broader pool of the best assets in the ecosystem, which we think will outperform over time. And to date, we have been selecting assets that have been able to outperform, and that's not through all phases, but when they do outperform, they outperform quite significantly. So it's a big part of it is the outperformance of Bitcoin. And then the second part of this is if we look at the fee structure, a lot of the ETFs have got a very low fee structure. It might be 0.5% per annum, whereas our management fee is 2%. What we can do in our fund that's unique, and Gabe touched on it before, is this concept of staking assets. And we can stake a portion of our portfolio for yield. And so we earn around, across the portfolio, we earn around a 4% yield per annum, which offsets the fees plus more. So we think we provide a great way to get good quality, long-term, diversified access to the space. And we are, I'm not sure how clearly it came through, but we only invest in liquid assets that trade 24/7. So there's full transparency in which of those alternatives we hold. And we can buy or sell those at any point on the open markets. And then we make sure that those are custodied in best of breed custody. So that's how we differentiate. Right. I think we might have lost Gabe, so I might wrap up. As Gabe mentioned before, if anyone's interested in talking more and learning more about what we do, or has any questions around anything to do with digital assets, please reach out to Ryan or myself directly. I'm Melbourne-based and love coffee, and Rhino's Sydney-based, and I'm sure he'll enjoy coffee or a call or anything as well. So please reach out. We'd love to have a chat, and we hope you enjoyed the presentation and have a great